Hello, friends, and welcome to my YouTube channel Simply Stocks. And a very happy new year to all. And this is the New Year Bonanza. Small that can be huge. These are small cap companies that can be big, and one of the company has already become like a, you can say, larger than what was small in the last 1 month before I made this video or after I made this video. But let's go ahead with these five companies that can be huge over the next 4 to 5 years. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about these companies, a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts that I put up, plus market updates that I put up. You need to understand that the cycle of the Patreon membership is from 1st of every month, so take that into account and kindly take that on the 1st or 2nd of every month India time. So on the 2nd of every month, kindly take the membership. For detailed market or company talk, or you want to have one-on-one discussion with me, you can directly email me. Now about the criteria of these stocks. These are established brands and strong managements, diversified yet market leaders in their own segments, low debt, absolutely no pledging or virtually very less pledging, strong institutional holding, and solid return ratios and numbers. If you want to allocate the funds, then allocate 20% in each of these stocks. Buy over the next 1 year time frame or on major market declines. Currently, the market is surging that we have seen. So kindly buy on major market declines, and that would be feasible. Can be 5x in the next, you can say, 5 6 years. Build positions on extremely bad days, on when market is down, say big time, it is red. So the first pick in my segment is a pharma company, Solara Active Pharma, emerging pharma brand which is big in APIs and formulations, and really they have gone ahead over the last 2 years into APIs. And what the change we are observing in the pharmaceutical space is that the larger pharma companies are more into R&D, and the smaller pharma companies are now getting into you can say APIs, and with this PLI scheme, etc., companies with larger API, you can say manufacturing units or base, would tend to do well. So my pick is Solara Active, front runner in this API production, and demand for active pharma research and products to surge going forward. I still believe next 1 year, 2 years could be extremely big, and the company is extremely small, so the market cap of the company is less, considering the kind of business opportunity that we have. It's around 7 8,000 crores still, so on declines it can be bought into. And strong domestic and FII and promoter holding, and there's only 12% free float. You have to get that into perspective. And profits had doubled in the September quarter year on year, so currently it is on a surge. So probably on declines over the next 6 8 months, you can accumulate and probably hold it for the next 3 to 5 years. The company could end up becoming 45 to 50,000 crores, something like that, 40 to 45,000 crore market cap going forward if things really fall into place. The second company that I want to talk to you about, and I have talked about it earlier as well as my, you can say, multi-bagger pick, and that is Acrosel India. I love the company, the way it is doing the business, provides a number of home improvement products, uh, kitchen products, emerging as strong player in this domain. So currently it holds smaller market share, but is gaining market share as well. So it is gaining, you can say, traction. Products include quartz sinks, chimneys, dishwashers, ice chillers, oven, refrigerators, etc. So big play in the consumer domain. It has global presence, and market cap of the company is only around 500 crores, 450 to 500 crores. It is a clear economy play and a big consumption play. In my opinion, the stock is slightly expensive. In my opinion, any 15-20% decline around 150, 160 could be good levels to get into something like a crystal. The third pick, and probably most of you who are viewing my channel would be aware of this, and why I brought this again, I'll just explain. So, Kilpest India is my third pick, provides diagnostic products for all types. Testing story is over virtually, so major, you can say, revenue that had to come in from testing is probably over, but company has a long way to go. It is currently 250 280 crore market cap. The profit margins is exceptional. So operating profit margin of 60-70% and net profit margin of around 30 to 35% is unheard of, especially in this domain. Valuations are attractive, so it went to around 500 520 in June July, and then it probably declined, and the way it has declined, it gone to 270, so it virtually went down around 40%, 40-45% from the highs. Even if we take 22 rupees EPS for I'm sorry, even if we take 22 rupees EPS for FY22, the stock is currently trading at extremely decent valuation. So as I explained, the margins are extremely good for the company, and then they have got approvals from US, European, UK. They have got emergency approvals for all sorts of kits. So currently exports are not opening. Maybe they are in talks to open up. You can say exports. Maybe things are moving fast. I think from FY22 onwards, FY23 onwards, numbers will set to improve sustainably. So I believe even if you take 22 rupees EPS, we could be looking at, even if it is if it is taken as a diagnostic company, it should trade at 40-45 times. Clearly a target of 900 possible on the stock, probably in a year and a half, could be 3x in a couple of years, and go even higher going forward. I won't be surprised that in 5 to 6 years time we could be looking at something like 2000 plus on the stock, maybe closer to 2500, 2700 on the stock. It has been range bound for the last few months and may remain range bound for the next 6 months as well. So you need to take that into account. So many positive corporate developments is also happening. You have the NSE listing, you have FII holding increasing to around 1-2% over the last few months, and plus a demerger of 3B Black Bio. There's a lot of confusion with 3B Black Bio, so just want to explain that once 3B Black Bio gets listed, you will get 0.87, round about 0.87 or 0.83 of each share of Kilpes that you're holding. That's it, and your investment will remain the same. So probably the stock price would be up and down compared to what Kilpest is trading at, but your investment will end up remaining the same, and you don't have to probably do anything. You won't have to sell a Kilpest to buy a 3B Black Bio and all that. You will get 3B Black Bio shares. So that's an amalgamation rather than a demerger, and that's also a big trigger for the stock to move higher. So Kilpest India is my third pick in this list. The fourth in my list is Tasty Bite Eatables, interesting company, America's largest brand of prepared Indian, you can say, food, dinner food, etc. Products sold in USA, Canada, Australia, New Zealand, Japan, and UK. It did not do that well for the last 6-8 months, primarily because you have seen how companies have done, primarily because you have seen how companies have done in this pandemic, which are exporting. So exports have really declined, and these kind of products did not get sold because of the shutdown. So probably 4 to 6 months, 2 quarters of results were not that great. Very high promoter holding at 74%. It is a strong stock with high return ratios of over 20-25% ROE. Absolutely debt free company. It is a high growth stock, and the market cap of the company is only around 2.5-3,000 crores. So I won't be surprised if this touches 14-15,000 crores in the years to come. And the fifth in my pick, and this is the stock that has really surged, Agrotech Foods, which is basically Con Agro, and it sells popcorns, Act 2 popcorns, etc. Big brand, and has been selling healthy snacks for the last 4 or 5 years, and now the stock is really surging. So healthy snack food company with heavy investments from individual large investors of India, that has taken place, and it is spread across India. Continuous profit growth we have seen in the stock, but the stock has not moved up. So again, a very strong ROE and growth has been seen on the bottom and top line, but the stock did not move between 550 to 750. It remained in a range, and now it has really taken out those levels. Strong stock and high return ratios. Their low market cap for such a business. Now it is around 2,200 crores. Earlier it was around 1,200-1,400 crores. So really low market cap. I won't be surprised if it trades at around 10,000 to 15,000 crore market cap over the next 4 or 5 years. Buy on major declines and hold the stock for longer term, and continuously analyze results. It is extremely important to analyze results and take your own call, consult your financial advisors, and then probably take a bet on these stocks. So these are the five stocks that I wanted to just bring to your notice. Kindly do your own due diligence and research and then invest into it. So that's a disclaimer. Please like and subscribe my channel, and kindly support me on Patreon. Thanks a lot for watching.